Hey guys, Steve Ferguson here, your modern mortgage loan advisor. Thanks for tuning in today to our Mortgage 101 series. Today we're going to talk about mortgage loan disclosures. Now, before I get very far, please like or subscribe to the channel. Would love for you to put that information. Actually, it's over here. And so there's a lot of great videos with a lot of important information that you as a potential home buyer or a current home buyer need to know. So today we're going to talk about mortgage loan disclosures. I know those things can be really confusing sometimes, and there's a lot of paperwork there. So I'm going to do my best to break that apart for you guys today and explain each piece. So here's how it starts. When you go under contract for a home and you write the contract, the seller accepts it, you've agreed to certain terms on that contract, like purchase price, down payment. If there is a down payment, you may have some seller paid closing costs, title policies, survey, any repairs, all those things are included in that purchase contract. When that information gets sent to your mortgage lender, and in this conversation, I'm going to assume that's me, then what we have to do is take that information and plug it into your actual mortgage loan application. So that way we can get exact details. So for example, if your purchase price is $450,000 and you're putting $20,000 down, we have to input that data into our system to make sure it all matches. Then we add any seller fees, any seller closing costs, any fees that you're responsible for. We also plug in earnest money and option money, things like that that modify your total funds to close. Now, when we plug all that information in, it's considered preliminary. And the reason it's preliminary is because we don't know all the fees yet. We have to put in estimated numbers into these disclosures in order to trigger the documents that you need to sign. And there's a reason we have to estimate those things is because it's impossible to know them all in the very beginning. An example of this would be like homeowner's insurance. You just went under a contract on the house. You may not have gotten your homeowner's insurance yet. And so we don't have that exact number, but we have to estimate a number when we send out your disclosures. That way you have a general idea of what it can cost. So keep in mind, disclosures are meant to change. So as we get additional information as we're moving forward, we're going to plug in the real data. So you get a homeowner's insurance quote from ABC Insurance Company 2 weeks after you went under contract. We get that data, we verify that data that it fits the guidelines, and we plug in those numbers into your estimate. And then we re-trigger it to you so that way you can see that it's been changed. Same thing for taxes. The title company will deliver a tax certification to us that says collect this amount for taxes on this property. Once we get that, we'll plug in that data into the disclosures so that way you know what you're going to get. So let's talk about what types of mortgage loan disclosures there are. Okay, so the loan estimate itself is a breakdown of fees. It's going to be a couple pages long, and it's going to have a lot of different fees, and it's going to be delineated by who pays those fees and what those fees are charged for. Now, some of those fees are standardized fees that nobody can do anything about. Other parts of those fees are what are called third-party fees. Like a third party is when you're paying another company for a service. When you're doing a mortgage loan transaction, third-party fees are required most of the time because you need a title policy, you need a survey, you need an appraisal. Those people are all third-party people that have been hired on your behalf in order to take care of pieces of the transaction for you. And then you have lender fees. Lender fees, I'm sorry, I keep hitting this microphone. Lender fees are things that your lender is charging. So it could be underwriting, it could be processing. You may have a permanent rate buy down, or you may be using a special product. All of those things are listed in the loan estimate. And so that's one of the most important documents that you want to look at. And that's the document that you use to compare and really see in black and white what is being delivered. So when your loan officer is communicating to you about here's what I'm thinking it's going to be, here's the estimated cost, here's the estimated payment, your loan estimate should match those things. Okay. And so closing disclosure. Now that's going to come out later on in the process. We're going to go over that later, but that's your final disclosure right before closing that verifies all your numbers. And then your initial escrow statement, it's another great document for you to review. That gives you an idea how much of your taxes and insurance are going into your escrow account and when they will come out and be cut to, for example, the final lender, et cetera. The entire goal of disclosures is to protect you, okay? So there are documents that explain your rights, how your information is protected, what we do with your information, what is correct right now, what is not correct right now, what is estimated, is your rate locked, is your rate not locked. There's a lot of different information on there that you need to know to make sure that you understand the full process of your mortgage loan. Now, as a loan advisor, it's my job to help you walk you through that. And that's part of this video series, is to make sure you fully understand what those disclosures do for you. Read all of them. I know it takes a while and it may put you to sleep because a lot of it is federally mandated. There's nothing that we can do on our side to change those documents. And so it's always interesting when you have conversations with different people that have questions about clauses. We don't have any control of those things. Those are fixed by the government. But it's important to understand that you do have protections throughout that entire disclosure process. Now, why mortgage disclosures matter? Let's talk about that for a second. When you're comparing in a mortgage world, as an example, and you're trying to shop, anybody can quote you anything that they'd like. I can verbally tell you, yeah, I'm going to charge this fee at this rate. That does not hold water in any way, form, or fashion. The disclosures that are done on the federal forms are the things that hold water. Those are the true black and white numbers of what can be delivered to you and what is expected to be delivered to you. That's why disclosures are so important. Whereas if a company gives you a document that has like their letterhead on it, it doesn't look like a federal disclosure, it doesn't have the right form numbers, the reason that may be provided to you is because they can change that at any time and there are no repercussions for that. They are not held accountable for that because they are not on those federal documents. So these disclosures are what really drives home the point of, this is what I've said you're going to get. Now I'm putting it in writing. This is what you're going to get. But please keep in mind, a loan officer cannot guarantee all those expenses in the very beginning because we simply don't have them. We have to estimate them. So when you're looking at your disclosures, when you're thinking about taxes and insurance, exclude those numbers when you're comparing side by side because nobody controls taxes or insurance. And sometimes that's used to make the numbers look artificially low when in reality, the loan officer doesn't control them, okay? And a great loan officer should explain that to you, all right? So important terms and definitions, right? So APR, what is APR? APR is annual percentage rate. That is not the same thing as your interest rate when you're looking at mortgage loan disclosures. Your APR means if your interest rate is 5%, and you have $5,000 in closing costs, it combines those closing costs with the interest rate and refigures it, and it spits out your first year's cost for the mortgage loan in the form of an interest rate. So instead of 5%, it may be 5.875%. That does not mean you're paying that APR every year that you have your mortgage. You're only paying it essentially the first year because your closing costs are built into that interest rate. So don't be confused by that. The APR is just an expression of total funds for the first year of what it costs to get the loan. Your actual interest rate is what you need to pay attention to. That's the rate that you're going to be having throughout that mortgage loan process, okay? And so common mistakes. Look, guys, don't read these disclosures with the expectation that you have the ability to modify them in your benefit in any way, form, or fashion. I know we all want to do that, but again, these were drawn up by federal lawyers that we really have no control over. I promise you, if we can make them better for you, we would. So don't step in this expecting to grab a highlighter and a black line and start crossing stuff out and initialing it and all those things. It just doesn't work. If you want a mortgage, then you've got to sign the disclosures as they are. And when you get to closing, you're going to sign the disclosures again, and they're going to be just as they are. So I caution you guys on that. It just is what it is on mortgage loans. The other thing that you want to make sure is you don't want to have any surprises in this mortgage loan. So when you're comparing, if you're doing any kind of comparison from a mortgage perspective, there should be a list of fees that are listed. And it's my job to make sure that I list every fee that could be charged. It doesn't mean it's going to be charged. It just means that it could be charged. And if I have all these fees listed and another loan officer gives you another list and a lot of those fees are gone, there's a problem. So it's easy from a loan officer perspective to make things look better than they truly are and then blame third parties when they come in higher. Guys, that's not what you want in business. You want to know up front, what can I be charged? What could I be on the hook for? Let's plan and prepare for that and compare truly apples to apples. And so if you don't have that, then you're going to set yourself up for failure. You're going to be upset at closing with that other person, whoever they happen to be, with that big surprise going, oh yeah, that has nothing to do with me, so I didn't disclose on the initial disclosure. Look, a modern loan advisor, somebody who cares about you and your family, is going to make sure that all the disclosures are done correctly. So that can be a pitfall. You want to make sure everything is right. The third thing I want to make sure is that you guys ask questions. It's our job to answer those things. We want to make sure that you fully understand what you're signing. what you're agreeing to, what this means on the mortgage process itself, and to make sure that you're fully protected and making great decisions for you and your family. So I don't want you to miss on those points. So I know it is a lot of documentation, but feel free to read it, and we're happy to go over any piece of it that you have at any time. Now, what also is important is when you get those documents, we need you to sign those quickly. There is a time stamp and a time schedule that starts once you sign those disclosures and once they get into your inbox. So make sure you sign them, date them, do all those things, get them back to your lender, hopefully us, very quickly. And that way we can start moving forward on your mortgage loan and stay ahead of schedule for your closing date, because you don't want to miss your closing date. That costs you money. The seller gets upset, all those things. And so signing documents quickly is very important. And so when you get those things, make sure you read them, understand them, ask questions, compare them, and then sign them and send them in. That allows us to legally start working on your mortgage loan. So any questions you guys have, I want to make sure you reach out and ask them, right? I'm going to reiterate that again. Number two, this is part of a Mortgage 101 series. So there's other videos in this series that I want you guys to watch. It's important to understand what you've got going on and to understand each set of what's going on in the mortgage process. I've done this for a long, long time. So there's things that I truly understand that you guys may have never seen before, because this is what I'm an expert in and you guys are experts in other things. So ask the questions, reach out, get comfortable. Now, a couple of other things that I'd like for you guys to do as you read through these documents. Make a list. Say, you know what? I noticed that this fee is not correct. Or I noticed that maybe this thing is not matching what I thought it was on the house. And so when you reach out to us, we're going to be able to address those individual list items and explain to you either A, why they're not correct yet, or B, that they will be correct, or C, we're waiting on this in order to verify and correct it. All right. Now, last piece of this video, which I think is the most important conversation that you need to have with your loan officers regarding disclosures, is locking in your interest rate. You may have already locked in your rate. Congratulations if you have. You don't need to worry about interest rates anymore. But if you haven't, have the conversation with your loan advisor. We're going to visit with our clients and make sure that they understand what's going on in the market. We're going to set future expectations and set some guidelines and boundaries that we should probably stay in. Now, we're not going to tell you specifically lock today, and scare you and do all those things, but we want you to make an educated decision, and we're going to educate you to make sure that you know what the market should be doing and is expecting to do, and is it safe to float your rate, or should we lock this thing in and not worry about it anymore? Well, I hope this was helpful. Hope you enjoyed this video. Please watch our other ones. Don't forget to like and subscribe. Appreciate you guys. Hope you have a great day. Bye-bye.